What's going on, everybody? Welcome to Liberate Your Money, episode 59. It is April 9th, Saturday morning. I wanted to talk a little bit about the markets. We're in a peculiar spot because the past couple weeks we've been relatively bullish, and we got shut down by the yearly open at 46.2K, and now we are breaching weekly support, and it's starting to look a little grim. There's reports of riots in third world countries from people that are starting to feel the food shortages and failing currencies around the world, and I think that's really what is pushing the dollar a lot higher. So we're going to talk about that. We're going to look at the Bitcoin chart. We're going to talk a little bit about Defikingdoms, let you know kind of my thoughts, and then just kind of go from there. So this is the Bitcoin chart. As you can see, this level right here, it can be coincided with the yearly open. It's a little above that, but that's basically the level that we need to get above, that green line. And it's been a major level throughout this whole consolidation, so it's really no super surprise that when we went up and tested it, that we didn't breach it. So it's not super cause for alarm yet, but just I'm playing it cautious until we get above this level, because if things do take a turn for the worse and this does end up being distribution instead of reaccumulation, I think we're going to see prices below these lows. I think how low, I don't know. I think that probably as low as we'll go is like mid-20s if we do breach that, like 20K at the very, very lowest. But even then, I kind of feel like it would have to be some sort of white swan event that just totals markets, like a March 2020 event. But we'll just have to see what happens. Like I said, the dollar is just absolutely chatting right now. This is the dollar chart. If we bring out some lines that I've drawn, this is the weekly chart. So this is going back to 2015 back here, and you can just see that this blue line was a major level, and that's basically where we're at right now. But I mean, look how steep this incline is. It's just been going bonkers, and the reason that it has been is because while we are experiencing inflation here in America, it would immediately not make sense that the dollar index would be going up, right? Because the actual value of the dollar is going down because of inflation. But the dollar index, since the dollar has probably the strongest currency in the world relative to all the other ones, that means that all these other failing currencies are fleeing towards the dollar. So the demand for the dollar is actually really high right now around the world, even though that the dollar really isn't in high demand in the United States. Well, actually, I shouldn't say that. It's probably in high demand in the United States as well, because a lot of people are uncertain, fears of recession. So what do people do? They flee to cash. I flee to cash in my IRA because I honestly don't know where markets are going to go from here. Like I said, I want to see BTC get back above that yearly open before I start going major risk on again. And I'd like to see Dixie here, the dollar index, form a convincing top and start to roll over. And look, we might not even see that until the Dixie gets back up to this 103, these levels up here, and we're not there yet. So I think we're probably going to continue to see a strong dollar, and that's not good for our asset prices, because it's the denominator, right? If the dollar's doing really well, it's tougher for asset prices to rise, simply because it's the dollar. The dollar is the denominator, right? So let's do a quick analysis on BTC. This is the range we're stuck in. The yearly open can kind of be looked at as like the mid-range. One level I wanted to see us hold on the weekly was this level here, that 43K, basically. That is the highest close in this consolidation down here, and as you can see, we breached back below it. So if we close the week tomorrow below this blue line, I think it's very likely that we come down and retest these lows in the mid 30s. Another level I do like, kind of like a last resort. I mean, these are last resort lines down here, this yellow and black line, but this blue line right here is another level I would like to see hold if we can't get this one up here to hold. I could see us come down and, you know, breach that 40K, you know, 39, 38K, and then snap back up. That's what I'm hoping we see. So we'll just have to see how the next couple weeks mesh out. And another point is we're a week away from the tax deadline. I know that it causes a lot of pressure on the markets. People have a lot of liabilities. They didn't realize enough cash, so they got to sell some of their assets to pay their bill. And so it could be putting some pressure on the markets. But again, you know, theoretically speaking, according to the 4-year cycle, this year would be comparable to 2018, so we have to be extra cautious. You know, this is the year that we really decide if this is reaccumulation or if this is distribution. And in 2018, it was distribution. And while we have a lot of people that want it to be a reaccumulation, you know, things don't go up forever, and especially when there's massive turmoil around the world. So we just have to be smart about our investments and not be, you know, hopeful and, you know, have our investment thesis built around hope, because that's not what makes us money. So protect your assets first, my friends. So I wasn't a near long. I had a lot of spot. I still hold a lot of spot, but I did sell a quarter of my bag on this pump up here. Once I seen this wick, and it was getting close to the daily close yesterday, I was like, yep, this looks like a top. So I sold a quarter of my bag. You know, I'm still up 200%, so I'm not like tripping about it, but I really want to see this get back above this diagonal and push higher. There's a lot of people bullish on near right now. I don't think the narrative is played out. It's still like a quarter of the market cap of like a Sol or an AVAX, so I think it could run. I think it could easily get above these highs. But again, if markets are dog shit, it doesn't really matter. You know, people are going to sell and protect their investments. So it's starting to look kind of grim for near in the near term. So a couple things I wanted to talk about. I wanted to show this clip from Luke Gromen. He is a big brain when it comes to macro stuff. I highly recommend following him, reading his material, checking out his podcast that he's in. He has a lot of good points of views. Seems like he has a good handle on how this stuff works. I want to play this quick 1-2-minute clip. He talks about how he thinks things are going to go in the next 5 years. I think it's really interesting because while I am fearful, a lot of people are fearful for a recession, he kind of hints at the fact that, like, look, the Fed is stuck in a spot where they're eventually, you know, they can't tighten anytime soon, and he thinks they're going to run inflation, CPI, really hot for the next 5 years to help get that debt percentage under control, debt to GDP under control, and then think about tightening. So what he's basically saying is he thinks that there is going to be some easing in the next 5 years, and if there is going to be easing, guys, that's good for asset prices. So, you know, maybe I'm wrong about this recession thing, but like we just have to be cautious and protect our downside. So that's what I'm doing. But this is a super interesting clip. I want you guys to hear it.
The United States cannot afford a positive real cost of capital. The United States government itself cannot, until inflation is allowed to run hotter for a lot longer than it has been, to get that debt load as a percent of GDP down to levels from which the Fed can tighten without choking off the U.S. government itself. And so I think what we're seeing in the action and that you described in these resource sectors, gold mining sectors, is I think there is and I think we're in a very early innings of this. I think there's this growing recognition that there's nothing more inflationary than a highly indebted government seeing rates rise, because it's only a matter of time until that nation's central bank begins injecting liquidity to control the price of money for that government. If we can assume that the U.S. government is not going to default on treasuries nominally, they're not going to default on entitlements in an election year or anytime soon while there's still 70 million baby boomer voters, and they're not going to slash 800 billion plus a year in defense spending, particularly now in the middle of all of a sudden hot Cold War II, then we can pretty safely assume, if we manage our risk properly in the very short term, in terms of air gaps or fears of recession, we can say with a pretty high degree of comfort that the Fed is going to have to come back. They're going to have to finance this again, help the U.S. government finance this, and let that 8% CPI last year run 8 to 10 to 12 to 15% CPI for the next 5 years, and then they can think about tightening.
Whew, boy. So that was a good snippet there. Like you said, it's the Fed is in a tight spot. They are going to, it's an election year, so we can't really assume that they're going to do any sort of tightening in the near term until like November, to the end of the year. And like he said, they're in a tough spot. They're probably just going to let inflation run hot, and and then they're going to have to, like he said down here, in the early days of a vicious sector rotation, the Fed is going to be forced to print money into an inflation spike. So we're going to have high inflation, and they're going to have to print money. And, a lot of people are going to be fleeing. If we're going to be experiencing 15% inflation for the next 5 years, people are going to be fleeing to assets. Where do you put your money in an environment like that? Maybe that's when we start to see a decoupling. Maybe, I'm assuming in sometime in the next 5 years, we see that spot ETF, Bitcoin, get approved. What happens then? Do people finally realize that, look, this is digital gold and we need more of it in our portfolios? What other assets out there are there that we can shield ourselves from this massive inflation around the world? It's going to be a major question, and a lot of people are going to be searching, soul searching, and figuring out what to do with their money. And so we're just going to have to see what happens. And so again, this is Luke's basically saying, look, as long as we protect ourselves in the short term, there could be some volatility, fears of recession, right? I mean, like I told you right at the beginning of the podcast, I was fearful of a recession. That's why I went cash in my IRA. But they're in a tough spot. They're probably going to have to turn the printer back on. They're going to have to finance this shit, and they're going to print more money while we are experiencing inflation. And I'm assuming that's going to mean good things for asset prices, relative to what else is going on in the world, obviously. But we'll just have to see. And we are in that middle, right in the middle of a 4-year cycle in Bitcoin. It's not typically a good time for a bull run. So, I'm just being cautious, protecting myself in the near term, seeing what happens after the tax deadline. Maybe asset prices bounce after the tax deadline. I don't really know. We'll have to see. So yeah, that's about all I got for asset prices. I did want to talk a little bit about DeFi kingdoms. As you guys know, I'm pretty big into DeFi kingdoms. Crystalville is just going amazing. I've accumulated so much crystal in such a short amount of time. It's super easy to bounce back and forth between worlds. You just switch to the DFK chain and boom, I am in the Crystalville, and can check out what's popping. There's really, the only thing you can do so far is take advantage of the gardens still. Let's see how my harvest is doing. Basically what I've been doing is every 10 crystal that I accumulate in my unlocked awards, I put that into my jeweler. So I'm not quite at 10 on my unlocked. So you can see how much locked rewards I've accumulated. Now, granted, the price of crystal has gone down a lot. When this thing went live, it was basically at $34, and we're below half that right now. We're at 13, 38, but markets are pretty fearful right now. Everybody's fearful of a recession. A lot of crypto OGs are doom and glooming, deleting their accounts, saying they'll be back, and look, like things don't look great, but like, you know, I'm gonna stay here. I'm gonna be still making videos, telling you guys my thoughts. But crystal's down a lot, and you know what? It's whatever. This is free crypto to me. Like I'm very optimistic about where this game is headed. It's super innovative. The first cross-chain DeFi game ever. It's taking advantage of Avalanche's subnets. I don't know if you guys heard, but Do Kwon, the Luna creator, founder, he is accumulating a basket of cryptos as reserve assets. The first one he announced was Bitcoin, and recently he just announced that Avalanche was going to be the other crypto in that basket of reserve currencies, which I thought was super interesting. You know, ahead of Solana, Ethereum, all these other ones, he picked Avalanche, which is what Crystalvale is built on, the subnet of Avalanche. So I'm super bullish on the space, accumulating crystal, holding my jewel. But every time I get 10 crystal right from my gardens, I take it over to the jeweler and I deposit my jewel into the jeweler, because Defikingdoms came out, and from April 4th to the 25th, they're giving out 100 Gen 0 heroes. As you guys know, Gen 0 heroes are very valuable in this game. You can summon unlimited amount of times. I believe the floor price for a Gen 0 hero is like 15k or something like that. So if you win one of these, that would be a massive come up. But every 10 X crystal that you have staked at the jeweler is one raffle ticket towards 100 Gen Zeros. So basically what I've been doing is every time I get 10 crystal accumulated in my gardens, I just realize it. So I would realize these unlocked crystal and locked crystal, and then I would take it over to the jeweler, deposit it, and then I would, you know, right now I've only got 11 jewel X crystal in there, so that means I'm good for one snapshot. So I got one raffle ticket, but every 10 increments of X jewel I get in there is another raffle ticket. So that's just something you might as well take advantage if you've got enough X crystal, right? So other than that, guys, like I've been keeping an eye out on heroes in the marketplace. If we go to the tavern, we can take a look at the agent, and then we can see what's for sale in heroes. Looks like price of heroes has gone up slightly, but the price of jewel has gone down quite a bit, so that's really not surprising. I'd like to buy some miners, because the miners are the ones that can unlock some, and gardeners I guess too, but miners are a little more efficient at it. They can help you unlock your locked jewel or crystal. So because we're at the beginning epochs of the crystal gardens, like 93% of whatever I gain is locked. So it's actually what's the word I'm looking for? I have motivation to get a miner or a gardener to mine more of that locked crystal so that I can receive more of it sooner. Because otherwise I have to wait till like the 51st epoch, and then it starts to unlock, and then I can get some of that locked crystal. But if I have miners or gardeners working for me doing the professions, they can accumulate a little bit of that locked crystal in the meantime. So that's kind of what I'm looking at. I'm looking for cheap miners, cheap gardeners that I can add to my collection, that I can use later on in Crystalville to get some of my locked crystal earlier. So that's about all I got, guys. Wanted to give you my thoughts on the markets. It's good that this near candle has just been flipping. We got a, you know, tabletop undecided candle here, fighting resistance. Got shot down pretty hard. I'd like to see this thing get back above it and go up, because I still hold a lot of near. And maybe, you know, if we have one good asset, maybe it can pull up some of the market, and you know, good things can happen. So we'll just have to see. Appreciate it, guys. Thanks for watching. I'll catch you guys in the next video. We got our 60th episode next time. I might do something special, so stay tuned. Appreciate it. Talk to you guys later. Peace.